Future Trend Channel is glad to welcome all of our subscribers. For the date of 7th of February 2019, we are ready to present our point of view of how to trade major currencies in the world financial markets. And today we'd like to speak about logical kind of factors, the factors that probably determined usually in an environment of economic forces usually plays probably the major role. We don't like to speak now about some kind of technical factors or psychological factors associated usually with real kind of trends, and at the moment it's hard to find a real kind of currency trend in one pair or another, because if we take, for example, the euro dollar, let's see the chart of the euro dollar. The euro dollar on the daily chart continues to trade in the tight range, roughly between the level of let's say 112 and 116, let's roughly say about this. And as you could see, to be honest, probably we could even narrow this kind of range to between 113 and 115. And now let's speak about logical economic factors that determined the appreciation of the United States currency at the moment. Of course, you know that the Fed decided to postpone its further increases of its benchmark interest rates probably for 2020, and now they try to be more or less patient regarding the next move. That should be attributed to the overall falling of the world economy. And now the picture is really such as the Jerome Powell, for example, described it during his last appearance. And we should understand there is no another alternative to invest besides of the United States currency. If we look, for example, to a European economy, every day we have kind of worse economic indicators. That's regarding the German economy or the French economy or Italian one. All of them publishes every day worse and worse economic picture. Today we have, for example, the German industrial production, and also there should be French trade balance, or for example, Italian retail sales. And we should be ready that all of them will be weak. Today is also the date of publication of European Union economic forecasts from the side of Economic Commission. And we should expect that finally the European Commission also will lower their forecasts. And of course it should not bode well for the common currency. At the same time, the last version of economic indicators from the United States were more or less encouraging for probably another interest rate increase from the part of the Fed. Of course, it's a little bit premature to say about all of this, but anyway. And as regarding some others part of the world, China is on the slowdown. The last indicators from Australia and New Zealand were absolutely weak. Even the Australian Central Bank decided to take more patient approach and a more accommodative approach, and now they're ready even to cut its benchmark interest rate, comparing to the, let's say, last point of view when they were ready to increase it. And the same applies also for the Britain economy. Despite of the Brexit woes, there are a lot of internal problems, and the last publication of Purchasing Managers Index characterizing the Britain economy or British economy, we also here seeing a kind of worsening the economic situation. And once again, in such kind of environment, it's really very hard to find another solution to invest, excluding the United States currency. And probably that should explain the overall trend of the United States currency for the last couple of trading sessions. Let's take the situation beginning from this week, from the start of this week. The situation is welcome for the dollar bulls, and that's probably logical. In such kind of environment, we prefer to stand aside before entering any kind of fresh short position in the United States currency. As regarding the euro dollar, probably it's time to wait for the testing of important, critically important level of 1.13 before entering any kind of a long position. Anyway, this morning we decided to enter the first part of a long position in the currency. Probably it's a little bit tricky, and anyway we decided to be a little bit beforehand, let's say, and decided probably not to miss an opportunity to use such kind of lower levels in the price of the euro dollar, because we continue to suggest that during the year of 2019 the euro dollar will be a little bit higher than comparing to a recent kind of price of this pair. As regarding dollar yen, also here the situation is not so welcome for the dollar bears. Of course, we suggest that sooner or later the dollar yen will be low and probably retest the lows that were witnessed at the beginning of this year in times of so-called flash crash, when the dollar yen plunged below the level of 105. Anyway, we suggest that while we are trading below moving average 200 daily line that's located today at 111.25 and a half, the pair should continue to trade lower. Sterling today is a day of Bank of England rate decision, and we should understand that the president of the bank, Mark Carney, should be less optimistic than comparing to the previous Bank of England monetary policy meeting. We should understand that this, despite of a recent kind of uncertainties surrounding the Brexit negotiation process, we should understand that the deadline of the Brexit is closer and closer to us, 29th of March. There are a lot of talkings about a kind of secret preparations from the part of British government. They trying to find a solution. They trying to postpone the date for another month. And at the moment it's hard to say how the British currency will react to such kind of news. Anyway, taking into account less impressive kind of economic indicators coming from the UK, we should understand that probably today the British pound will receive another portion of negative news in the form of today's Bank of England rate decision. As regarding dollar Swiss, from technical point of view finally closed above the parity level, and that should open the door for testing of the highs of 2018 located around the level of 101.28. And I don't know what could change the picture here. Probably only breaking below the important level of 0.99, but now that could happen only in case of sharply rising risk aversion fears, or for example some really bad news for the United States economy, and a much better situation with the Swiss economy, which is absolutely unbelievable now. As regarding some other parts of financial market, currency market, the euro crosses, here it is. It's at the moment it's hard to find any kind of a real opportunity to enter one way or another in the euro currency, because euro currency itself is really very weak at the moment. As regarding commodity block of currencies, we already mentioned today both of Kiwi dollar or Aussie dollar is looking really very weak at the moment because of the last portion of negative economic data. Probably it's time to wait a little bit, and in case of for example the Kiwi dollar, we closed our long position on the break below immediate kind of uptrend line located at 68.20, and now prefer to wait for the level of 67, where is another support line in the currency, before entering any long position in the pair. Thank you, ladies and gentlemen, our dear subscribers, for all of your supports of our channel. Thank you, take care, and see you the same time tomorrow.